We are live. I got J Titta sideways today. I'm not sure if it's gonna show up that way sideways, and we got Sir Isaac
Sh-
Pick Newton
Yo,
in that good lighting, in that good old DC sun, man.
yeah, I know, right? It's perfectly in my eyes. It's the best angle it could be at.
Sun gazing and doing a zoom. Get enlightened and enlighten people at the same time, man. Come on.
There we go.
How you guys doing today, man? How's y'all weekend?
Pretty good, man. Pretty good.
JT's gonna steal the intro and go into his whole spiel now.
Do you want to do it? Hey, go for it if you want. Floor is yours.
Isaac, how was your weekend, boss?
My weekend was pretty good. I got kind of sick, so I
Oh,
was feeling kind of under the weather, but yeah, for the most part, it was fine.
so you were Isaac sick instead of Isaac shit, huh?
Yeah, these are good. These you got to write some of these down. These are some pretty good zingers right
As I promised, I didn't plan them. Well, sweet man, we can go ahead and get into the content. So I'm gonna just start quickly by sharing my screen and just going through some charts here. We got the central bank balance sheet still ticking down or trending down. This is a good sign. They're really offloading. They're offloading some junk. This is just going down and down by the week. Now it's just like free falling. Then we got the M2 money supply still on a. It looks like it's
Offloading
starting to
bonds
roll
mainly
over.
off their balance sheet, by the way. That's mostly bonds. They still have a super fucking long way to go. Remember, they were the largest holder of bonds of U.S. bonds in the world. So
Yeah, so that's good. We got gold. I'm sure it's still consolidating. See how the S&P is doing. Yeah, I don't really know where the S&P is going, man. It ain't no telling at this
September
point.
September is always like historically a negative month.
Yeah,
Like
for
literally,
Bitcoin too.
stocks are actually negative. So you see mixed opinions on if the equity market has more room to rally, or basically, are we in a bear market or bull market? You've been hearing folks ask that question. So, yeah, we shall see.
We shall. We
I would
shall.
say as
Same
yields
thing.
continue to move higher, equity markets should continue to the downside. But yeah, go ahead.
Yeah. Same thing here with the Dow. Same thing here with the Nasdaq. Apple is still retesting previous all-time highs. Looks like it's turning it into support damn near. We have 2 months in a row that it was tested at the bottom of that level. And then I'm not gonna go through all the Amazons, Coinbase stock. This is like the only stock I'm buying for right now, at least. And then we got Bitcoin just still within this channel here. And we got the halving like 200 or so days away. Like we've been saying before, I think the halving's gonna have less of an impact, but I do think that the narrative could cause BTC to maybe pump to like 30, 35K. We'll see. And then same thing with ETH. I couldn't imagine where ETH would be without EIP 1559, which is burning
Futures,
ETH on every transaction. What's that?
three futures ETFs on Ethereum were just launched today as well.
Wow.
But yeah, it was ProShares,
You
Bitwise, and
did hit me.
VanEck.
You asked. No, I'm just playing. Go ahead.
Yeah, but no, it's ProShares, Bitwise, and VanEck. And, of course, with that news, Grayscale filed to convert theirs as well. So we shall
Of
see.
course.
Yeah.
Yeah, of course. And then we got the ETH to BTC ratio just still trending along in this channel. It looks like markets are just gonna keep consolidating until further notice. Man, did you guys see Gary Gensler getting grilled in court?
No, I
Yep,
didn't
I
watch it
watched that
actually.
whole thing.
It's just so crazy how he flip-flopped. Like when he was teaching at MIT, he's like, these assets are not a security. Most assets are not a security. And now he's just like, he can't even answer a question without being like, yeah, so how he tests this and this. Like he can never just answer yes or no. It's crazy, man. What do you guys, what's your guys' thoughts on the market? Any updates? Isaac, I know we were chatting over the weekend. You had
Crypto market?
data. Anything you guys want to talk about?
Oh, yeah. So I was gonna say, we were supposed to talk beforehand, so my apologies. But yeah, Isaac, I know you had some stuff to kind of throw out. Of course, I got some stuff as well. And I know you said it was gonna tie into housing, and it was a bunch of housing data that came out just fairly recently. So it'd be good to see how that ties into each other. I guess I'll just start very briefly on just the bond market. So the 10-year yield actually hit 4.7. Obviously
Right.
it moves, so it might not be exactly at 4.7 now. It could be higher or lower. I haven't checked in like 2 hours, but it's at 4.7, or it was at 4.7 today, and that's the highest since October 2007. on the 10-year yield. So that's pretty significant, I guess, in our minds, right, from a perception standpoint. And then another interesting stat is like the 10-year went from in May 3.5% to now 4.6 at the end of October. That's equivalent to an 8% decline in bond prices. And so obviously we know that if yields continue to go higher, which they have been all year, and it's still ticking up today, and it seems like it's going to keep happening, especially on the short end of the curve, I would assume that that's going to put more downside pressure, as I said in the beginning, on equities in general. And so we shall see. The long end of the curve is pretty interesting, but I don't know. The only thing that's telling me, is that they expect rates to stay very elevated. The bond market does, and if we pay attention to the bond market, obviously we know that it's a good barometer to get a sense of the direction going forward of the economy. And on the short end of the curve, that's where all your money market funds and all your like cash equivalent funds basically are piling into. And so, it goes back to the question is how long does that last? Is that going to continue to push yields higher because you're actually seeing more demand on the short end? And then what does that mean for the long end as demand dwindles? You can't let the long end of the curve just get fucked. That's definitely recessionary. That's the long-term economic outlook. So once again, we shall see. I just thought that was interesting how quickly yields are rising, but the stock market is still like somewhat buoyed. It's just very weird right now. Moving on, housing. So I think I kind of went over this like a couple weeks ago, but like the 30-year mortgage it's been sitting over 7% for over a month now. The last time it's done that is like 2002. But just today, pending home sales were down 7% month over month. So pending home sales just mean like signed but not closed, right? So if I sign a contract but it just hasn't closed and it's scheduled to close, that's what actually declines. So less people are signing contracts essentially. So you can look at it that way. And it's down 18% year over year. Now, the NAR just came out with a report that showed that home prices over the last year increased 4% nationally. And the average price for a new home right now is this is for an existing home. Maybe this is total homes. I actually got to look that up. I don't know if this is all homes or new or existing. But anyway, that number came out to 407,000. Total inventory down 14% year over year. And we're down to 1.1 million units. I mean, guys, just to try to put this in perspective. So we're short about 5.8 million units. Before the GFC, we were building like a million units a year before the GFC, 2008. Now we're down to total 1.1 million units total.
Does
So
that mean like units on the market that can be purchased?
single family, yes. So I'm just
Okay.
speaking of single family inventory right now. And I was
Like
reading
empty or people just like empty that they've built and just vacant, or like what is that
inventory could
actually?
mean, things for sale. If it's sitting and it's for sale.
Okay.
Yeah, if it's not for sale, it's not counted in the
Could be
actual
for
inventory
sale,
size.
occupied or not, doesn't matter. Got it.
Yeah, it could be, yes. And so I was
Okay.
reading, I don't know if it was on was it Twitter? I was kind of going through some comments and I saw someone, they commented like the people who are saying the housing market won't crash are forgetting two things and are assuming two things. And he said that they're assuming that unemployment won't rise sharply, and they're also assuming that wages will continue rising. People like that, they always reach to me. That's a reach. And so no one's saying that we don't expect a spike in unemployment, but we don't know if that's going to happen. And of course, if there's a huge spike in unemployment, that's going to hit housing, of course. But also on the flip side, we got more renters than ever before. And so how much would it actually affect home prices if there was a huge uptick in unemployment where a lot of those people are actually renting? So I'm a bit uncertain on that look. And then wages are always an interesting one to me as well. Wages historically rise at like what, 4% a year. I forgot what the latest data was, but I think it was around 4% year over year. So we're never just going to see a huge increase in the wage numbers in over month or year over year. That's just, I've never seen it and I don't think we would see it. And so that's not really going to have a huge effect as well. So, I mean, it just goes back to what I've been saying for probably a year now, bro. Supply is the only thing. I mean, it's supply and demand. That's what the housing market is. And the only way we'll start to see some relief is supply. That's it. That's it. I hope somebody corrects me because I want things to be different, but Supply is the reason on affordability is at the lowest level it's been since they started tracking it in like 1986. It's literally at the least affordable point in history. And so the only thing to kind of bring that back into balance is a recession itself, or you just get a huge supply of housing on the market, which cause prices to stagger a bunch. And also,
which is
just
very unlikely.
which part
The
is
second point.
unlikely?
The second point.
I'm gonna be real. I
Because
forgot what I
people
said second.
The
basically
supply of housing.
building a lot of increasing the
Oh,
supply.
yeah, it's not going to happen. And then the housing market is so institutionalized right now as well, the Federal Reserve and just with other institutions. So, I mean, they're not factoring that in as well. And so the average home price with 20% down on a 30-year fix, your monthly payment on average comes to about 24, 23. That's principal and interest, and that's about 91% higher from 2 years ago. So prices effectively doubled, like your cost to own that home effectively doubled, right? So it's 91% higher than 2 years ago. Now we have another thing that's going to exacerbate all these issues with the property insurance market. So I just read a stat this morning that said weather and thunderstorms are responsible for like $35 billion this year, just in the first half of the year for damage. And so now insurers are getting are you guys familiar with reinsurance?
No.
All right, so you got insurance, which insures whatever, and then you got reinsurers, which insures that insurer. Does that make sense?
Yeah.
So yeah, so if I'm giving Isaac insurance, I want to get insurance from you, Vince. So that way, if something happens to me or I get too many claims or whatever, I can make sure I remain profitable. And so reinsurers, Fitch did this report, the ratings company. They did this report and they said that reinsurers are going to expect a 14% return on equity just by reinsuring all these insurance companies, which is going to push premiums a lot higher, especially on property. And we've already seen that in California. They pushed them so high, and a lot of property insurers pulled out. So that's only adding to the cost of owning a home. So, affordability is the thing right now. And the only way to get prices back down, once again, please guys in the comments, leave a nice comment to prove me wrong in this case, but supply is going to be the biggest thing to focus on because everything else is pointing towards higher home prices. So it's going to be interesting, and like I've been saying, for 2 years, we're going to be a renters nation, and that's playing out now. So
I know it's like you got the whole hindsight 2020 and like people always say like when you want to be a good investor, you want to go against the crowd. This seems so obvious to you. Why do you think it's not so obvious to everyone else? Like what are people
because
missing?
I would say it's split up like any other market, right? So you're getting like this opinion, you're getting that opinion. So you got a lot of people thinking the housing market has to crash here very soon. You got a lot of people saying what I'm saying, that it's not going to crash, whether it's for different reasons. You got a lot of people only talking about supply, literally. You got a lot of people talking about Airbnb, even though it's like even every Airbnb unit, some of those are just a room, some of those are ADUs, some of those are shit that people just set up in their backyard. So that's not going to have a huge effect on the overall housing supply. You know what I mean? So you got people referencing a bunch of shit. I guess to answer your question, it's never really obvious. I wouldn't even say it's obvious. I came to that conclusion over time, being a practitioner in the space, but also, studying the market at the same time. So that's how I came to that conclusion. And like, look, if you talk to a realtor, they're probably going to give you a different opinion. You know what I mean? Just because it just
Yeah.
depends on what their lens of the world is, I guess. So I can't really answer that question. To me, it's like either you're lying or you're just misguided. If you can't see, if you're a housing professional, and you can't see that supply is the biggest issue. Some people say it's not the biggest issue, but it clearly is. But teach their own.
Okay. So I'm gonna ask this question and I want to hear Isaac's thoughts. So for like a macro investor out here who's trying to make the best decisions for their portfolio while observing what's going on globally, specifically in housing as well, because obviously that's the big thing. Real estate's like the biggest asset class. What advice would you give to someone to kind of like peel back the curtain and not have to? Because you said you came to this conclusion over time. I'm sure that's been a while, maybe 6 months, maybe a year. I don't know how long. But how does someone cut their learning curve in half and like, you know what I mean, peel back the curtain and see what's actually true and not be like misguided or what do they call it? Hoodwinked. He said, "Fuck you, I'm not answering this question."
He's out of here.
Cool. Yeah, if I had to throw in anything in there, I would just say like back testing slash studying history will help. Obviously, we do believe this time is different. Well, if it's something that's on a chart or something that correlates with it, like, oh, like, and this may not apply, but like, let's say whenever bonds is here, housing does this. So you can like back test things that are like correlated with it. Whatever those things are, not sure. But as a like a trader, like for me, when I'm looking at charts, sometimes I'll go back and back test and I'll pull up like, okay, what happened every single time the Federal Reserve raised or lowered interest rates or kept them the same? And you can like color coordinate on the chart and then you'll start to see patterns. I think that's like one of the best things to learn as a child, like just being able to recognize patterns, just like going to the beach and being like, oh, the waves come, every so often, like just like simple stuff like that. I feel like it translates to things like this because everything is
Yeah.
moves in a cycle. So that's what I'd
It's just the
say.
definition of IQ is recognizing. It's like that's all they test for when they test people's IQ.
Really?
Yeah, you ever done an IQ test?
I don't think so. James, I remember when we were living in 6106, we were going to do that whole Ty Lopez thing. Mensa. I think it was Mensa or something like that. I don't know if I've ever done one.
Yeah, do an actual one.
Wasn't it beginners mock for dummies? Say no. I'm just kidding.
IQ for dummies.
All right. Enough jokes for now. Isaac, what's your thoughts on everything, man?
So my thoughts are very actually confirmatory of a lot of stuff that JT's been saying. And mostly like JT kind of got me thinking last week or like a week before that about housing and then how supply side effects on inflation tie into the housing market. And it worked because a study just came out recently. This guy called Adam Shapiro, and he did a study breaking down the inflation rates that we've been having by supply side or supply driven inflation versus demand driven inflation. And his methodology was basically if you were to find an item that is increasing in price, so it's inflating in price, and you looked at the quantity of those items being produced, is the quantity decreasing or is the quantity staying the same or increasing? If it's decreasing, this is usually indicative that the inflation is caused by some sort of supply chain disruption. The supply is decreasing, hence it's more expensive. If the supply is remaining the same or it's increasing, but the price is going up, then this means that this is some sort of demand side inflation. More demand for the items is causing the price to go up. And when you think of like typical supply side versus demand side, supply side is typically like food, energy, it's like the non-core. And then the core inflation is typically, but not always, what you think is more like demand side. But there's a lot of changes. And when he broke this down, he found that in Europe, the supply side inflation made up like 80% of the inflation they're having in Europe. And in the US, there was a lot of ambiguity around what percent of our inflation was supply side and what percent was demand side for a long time. And the reason why this is important is because when you heard people talking about, oh, inflation's transitory, no, inflation's permanent, this debate over permanency or transitoriness of inflation really is a supply versus demand side debate. If the inflation is being caused simply or predominantly by some sort of disruption in the supply chain, it is more than likely that the inflation is just transitory. Because as soon as whatever is abrupt or blocking the supply chain, or as soon as supply chain is able to work around whatever the issue was, you're able to get back to normal prices. But if it's demand side, it's a lot harder to solve. In the same way that JT just said, if the issue is that we need to build more homes because more people are seeking homes or whatever is happening, it's a lot harder to build more homes than it is to just deal with some sort of like supply chain issue, of like lumber or something, right? So
Hmm.
this is kind of the general idea. In Europe, he found it was mostly transitory and mostly was dominated by the supply side. This is the Ukraine-Russia war, as well as a little bit from China underperforming in a lot of its production models. And in the US, though, he found that most of it is actually now demand side inflation. And a lot of the change we've seen in inflation in the last year and a half has all been from the supply side inflation going away in the US. But if you actually were to show a chart, if you were to show a chart and you have like, here's the chart, here is demand side, here is supply side. It's been going down up here, but staying flat more or less here. So currently our inflation, and what's remaining of it, is almost all demand side. And of that demand side, it's almost all housing. That's like the vast majority of it. So this kind of brings us to like, what is in the main issue with bringing down inflation further? Well, the main issue kind of comes down to how the prices for housing, you're talking about prices for new housing versus prices for resale like housing. The prices for resale housing are very close to passing the prices for new housing, which is very bizarre. Last time this happened was in 2005. It's very bizarre for resale value for houses to become higher than new housing. And the reason why that's happening is because 90% of people who own a home right now are locked in at a 5% or lower mortgage, and they're not selling. The amount of people selling homes right now that they already own is next to, it's nilch, it's nothing. It's like lowest since 2005 or 2010. And we're not building enough new housing to make up for the fact that nobody wants to sell the homes that they already have. So what we're getting is kind of a stagnated housing market where, despite the best efforts of federal policy, we're not seeing this precipitous decline that we would need in order to deal with our inflation. And you can take it from there. So that's the study I looked into. It was very interesting.
Well said, man.
Yeah, I'll send it out. And even a lot of the other demand side increases, like I like how you just said, it was a supply of money. So it's supply side because it's supply of money. But really the demand side of increasing the money supply is when people have a ton more money at their disposal, they spend more. And that's demand. And what you had during COVID was people building up savings. Savings were at its highest level in like a decade during the COVID years. And almost all of that savings has been spent now. Like if you measure that savings, it's almost all gone now. So the main sticking point that remains is housing, because even a lot of the COVID stimulus demand side is kind of blown over at this point. It'd be sick if it was supply. That'd be sick. Just big government program, build a bunch of new houses. I'll buy one. Sounds sick.
For real.
Maybe not at these rates, but
Can you guys gauge how bad this recession would be? Like, I guess compared to the GFC, as you call it, JT? Are we talking like depression levels? Because I know we printed like a lot of money, and that has to get like sucked out of the system. Like, how bad does this get, and how do we like start over from here?
I'd say depression is pretty unlikely. I'd sooner bet a soft landing personally. I'm saying more probable than a full-on 30s style depression, like breadlines and all that other shit. I think we're very far away from that, in my opinion. Because we have to think, what created the 30s style depression? Like we didn't have any of the financial tools that we currently have at our disposal. I don't even know if it's really. I don't want to jinx myself, so I'm not knock on wood right now.
We didn't even
but
have
I don't know
computers
if it's totally possible anymore. Well, yeah, and we didn't have the Bretton Woods, like a global monetary system. We were on a gold standard. There was just so many things that held back
They were
our
printing money
financial
physically.
institutions. They were. Well, like, what do we even, like, in that sense, consider a recession? Because I think in cases like Compton, Detroit, Flint, Michigan, just like any number of places that seem to have had a former like industrial base. Are you still there? Like this former like an industrial jobs base where it's like everybody worked at the Ford factory building cars, and there was a coal mine, and like it's kind of a bygone era. We think of it now, and there's a good term in economics called creative destruction, and this happens in economies all the time. Some people get left behind because as an economy shifts, in this case, we shifted from a production-based hard capital economy. So like we had like capital production tools and we made actual items to now we're like a service-based technology economy. So like most of our job base is either in the tech sector, servicing the tech sector, or is in something ethereal like finance or whatever, e-commerce. It's very much like it's a much more ethereal economy. And yeah, some people get left behind. That's just kind of how it goes. And the shitty thing is that especially if the job that's leaving is very location based, like a factory, you're really fucked because it like puts all the economic downturn into that one area. Where if it was like an economy where it's like everybody's kind of working remote or, like it's whatever, you're doing a telemarketing thing, that's a lot more dispersed. You're not going to get that immediately. Like once the factory's gone, the downtown's gone. You see all the nurses are unemployed too because now everyone's, fucking out of there. Nobody's paying their hospital bills. Nobody's paying to eat out. Nobody's going to the grocery store. The whole thing shuts down. And in that case, you see this like mini depression where it's like there's a precipitous decades long economic stagnation and decline.
I never thought about what you said about like how it can be like depressionary in certain areas. Because my dad was laid off during that time too. We didn't like go and do the strike or anything, but he was working at Chrysler, and I remember he was getting laid off, and my mom was like working overtime, and I just remember thinking like, man, why am I seeing dad more and mom less? But nothing really changed. Like they handled it well. Like I didn't really know what was going on at that point. That's actually when me and JT met, like during the recession in 2008.
Right.
Yeah, I was just telling him that we were on the phone the other day, and I was just telling him like, man, I've known you for more than half my life now. That's crazy. But I don't know how bad it can get, man. And I only say that because like you guys said, the tools that we have are different. And it's almost like if you look at it like a telephone, it's almost like the Federal Reserve has like these weird networking effects, man, to where things can't get below a certain point just because of the technology that we have. And it's easier to fool people, to be honest. Like I forget what book I was reading in,
Yeah.
but like back in the day during the Great Depression, I think this might have been Creature from Jekyll Island. I don't remember, or one of Ray Dalio's books, but like when people would go and do a run on the banks would, to fool people, they would have people transport gold from one bank to another. They would keep people locked out, and then they would have them bring it in through the back just to show them like, oh, we have gold here. And they would also like put bricks, like bricks that they use to build houses, under the gold and cover half of it so it looks like it's all gold, but it's really just one stack of gold and the rest is bricks. So
Really makes you think, huh?
yeah,
Really
so
makes
it's
you think.
like now that all they have to do is like press a button onto a computer. We have a
Yeah.
CBDC right around the corner. It's hard to say. What I'm most trying to figure out, and I guess this is a question for you guys too, is like what's going to be the first thing? What's going to be the best investment opportunity after all of this is over? My first my first intuitive question or answer is crypto, just because it's so small and it's so liquid. But what do you guys think? Man, you know how I look at the Lightning Network. It's kind of like the TCP/IP competitors. Like that shit was good. Nobody built on that shit though. I just don't like, bro, living out here in SF, there's a lot of sector Bitcoin maximalists. Like you have whole groups around Bitcoin SV and Bitcoin Cash. Like so many people believe it's the different kinds of Bitcoin that's going to be the real Bitcoin, and people are going to build on that, and it's going to overtake ETH, and the flipping is all bullshit, and that's where DeFi is going to go. And I'm just like, you guys are ridiculous. Like even the whole ordinals thing. When's the last time we heard about that? I mean, granted, it could be like a CryptoPunks thing where like in a few years in the next bull market it's like a part of history because it's the first NFTs on Bitcoin. So I wouldn't be surprised if that happens. But with all of these layer ones who and granted came from Bitcoin since it was open source, it's just so much more efficient and easier to build and more developers working on it. I don't really look into the Lightning Network too much other than the fact that that's where the transactions for Bitcoins are gonna be, meaning like when people are sending and receiving, if fees get high or something like that. It's people that shitting on this version of Bitcoin as we are. Like they're shitting on all of it. Like if some people believe Bitcoin SV is the real Bitcoin, like it's crazy, man, living out in San Francisco. People are like wildly delusional. But
It's kind of an echo chamber too.
yeah, with all the innovation happening with layer twos, not even just layer ones, like I don't think much building is gonna be happening on Lightning Network other than like custodial and industrial type applications, if that makes any sense. Like the stuff that like wallets and stuff that Jack Dorsey's working on. But hey, maybe I'm wrong, but if I'm a developer, I'm gonna go where I see retail going and people aren't using Bitcoin for that. So yeah, that's where I'm at.
I mean, it doesn't really have a use case. There's no use case for Bitcoin. It doesn't do anything. I've never heard anyone tell me ever that it does anything. I've never heard anyone give me a single, other than, you know what it's useful for? International large sum transactions. That's the only thing I've ever had major use for it. Do you know this reminds me of?
You fucking
Do you know this
guys,
reminds me
man.
of? So there was a study that was done on technical versus fundamental trading. Okay, and a lot of people crap on technical analysis, because they're like, "Oh, you're just looking at price action. It's all nonsense. Doesn't mean anything." You assume that the price accounts for 100% of the information. That's dumb. And then people who are fundamental traders are like, "I looked into the asset. I looked into its value. I looked into its use cases. Blah blah blah. I can make the best prediction." In the study, though, it found that actually technical traders almost always outperformed fundamental traders. And the reason why is because you usually make more money when you just throw your money into the thing that everybody else thinks is going to make them money. The technical traders are just so much more in tuned with the horde, with the mass, and they would just buy what's going up. And honestly, the best investment advice is you buy something that's going up and usually just keeps going up if it's like a well-known item. It'll stop at some point, but given a long enough time frame, it just kind of goes up. And that's Bitcoin. Bitcoin's like the equity derivative. It just kind of goes up, it'll go down, then it'll go back up. It represents all of crypto. Everybody buys into it. It's our mascot. We love it. So I think if crypto does well, Bitcoin's just always going to also do well with it. Even if it has like literally no use case outside of like large money transactions overseas or whatever.
I would say
Yeah,
that.
other than none, even if it has none.
So JT, me and you had this argument like a few weeks ago, and it's like I agree, but I don't. Like it's not a utility. So yeah, it doesn't have like a use case. It's not like ETH where it has all these. Even though it is like you can technically have smart contracts on Bitcoin, but they'll be like way less efficient. It's not supposed to be used just like gold. Even though you can put a gold necklace, you can't have a fucking Bitcoin necklace. So other than that, like it's just meant to like store your wealth. So I get that. But I would say it has a lot of properties that makes it really good at that, and that's why people are buying it. That's all I would say. I don't think it's supposed to be like a utility type asset.
Well, I like crypto's use case generally is amazing. Like the idea of crypto as a digital native way of transacting with people peer to peer instantly and encrypted is phenomenal.
Tokenizing.
It's
Yeah.
just, yeah, tokenizing is amazing. I don't like the governance models that you see a lot in DeFi because I fundamentally think it's like this idea of like democratizing and financializing governance. I don't think it functions very well. But I think the peer-to-peer aspect of crypto and sending encrypted stuff is going to be not only useful, but I think like really highly necessary as like JT saying, we move into this CBDC. Everything is now monitored. It's all run through these really inefficient machines. Because here's the thing: there's like two models for how to do blockchain. Everything's going to be blockchain in the future, but the two models are token or account based. And token based is what all of crypto is. And it's highly efficient if done correctly. Usually you need to have, it can't be as decentralized as we currently do it, but if you make a bit more of a centralized somewhere in between, you can get rid of a lot of the inefficiencies of all these different nodes fighting each other to validate the, like the block. And if you do that, you can bring down price per transaction pretty significantly. The government, though, hates all form of token-based blockchains because they are very hard to trace back to people. They're almost always pseudonymous. And because of that, it's very hard for the government to keep track of what people are doing with their money, and then it's hard to tax people. So they like account-based, where instead of following the token, you follow the account. But that it's just so much less efficient. Like account-based models are like insanely less efficient. And they usually, if the government does it, they throw a bunch of nonsense monitoring systems involved that just increase transaction costs. But that's the only way they're going to do it because they want to make sure they can track your money so they can then tax you and sanction you and control you.
Yeah, it's true. I think Polkadot, Gavin Wood talks about, founder of Polkadot and ETH, talks about like he wants Polkadot to be the chain that people use without having to worry about tokens and gas and stuff like that. I still am pretty bullish on Polkadot, but I don't know which one's going to win. It's too early, man. And the parallels aren't as obvious to the internet because it's way more competitors. Like you only got a couple companies doing mobile phones. It's like 30 layer ones out here, man. It's crazy. But here's another thought. Crypto and blockchains, the token base, I never thought about what you were saying, Isaac, and token and account base. I'm gonna have to do more research on that. But shit, it could keep these governments more honest, man, because given that you have something that has value that is electronic, like every other asset is it's harder to send overseas. You know what I mean? Especially while without being tracked. You have both with crypto. So governments are like, well, shit, if they don't like what we're doing over here, and let's say crypto gets to the point where it represents like it's actually a major asset class, so it's like multi-trillions of dollars in there. It could do a good job in keeping governments honest because they know that with the click of a button, people will send all their shit overseas if they make some crazy change. So I'm bullish on that.
That's why they'll never do it, because they don't want they want to capture their citizen base, because a citizenry is a capital producing base. That's a production asset right there. You got a citizen, you got a productive asset, and they don't want citizens to be able to move overseas or move their finances overseas as soon as the government does something they don't like. They want to make it as hard as possible for you to do that, so they can then capitalize on the marginal costs and tax that. Because if it's harder for you to become an expat or shoot your money overseas, then they can apply even higher taxes on you, because your risk assessment, like you're weighing, should I move overseas, should I not? If it's a lot harder to, then it's going to be a lot harder to push you to the point where you want to take the risk or go through all the paperwork or whatever. So they want to make it as hard as possible, as many barriers as possible for you to be able to completely de-dollarize yourself. That's why China says just no way. Like, they just completely control the entire outflow of their own currency because they want you totally trapped. And the US has their own system of doing that. You can leave the US, but we have systems to make sure that you still get taxed, even if you become an expat. Like, because we control, no other country can do that. Because we control the financial system, we can do that,
Yeah, that's a good point. But here's something else to think about. All it takes is one country to do it, and their liquidity increases hella, and their population starts to increase. It's like a game theory kind of thing. Like, I feel like the only way that no one will do it is if everyone came together, and the whole world is not coming together for shit. If one country do it, if one major country do it, and they start to pick up steam, I think other countries are gonna be like, "Fuck, we kind of got to get with it or get left behind," kind of thing. So
yeah, I mean, we could see something like that. There's a really good book you guys should read. The book recommendation is called Sovereign Individual, and I've talked about it on this. I was gonna say this podcast, this conversation we have. It's by this guy named William Rees-Mogg, and he's a British lord, and I think he died in like the early 2000s. But he wrote several books on socioeconomics. So like, it was how technology affects economies, affects society. And he created kind of like a grand narrative for how he sees our current technological epoch culminating in people having better control over their individual financial power and job placement and everything else. He predicted everything. In this book was in the 90s. He predicted like remote work and how that was going to completely change the economy, how it was going to make it so that like municipalities no longer had control over people because they could move anywhere and work anywhere else. I talked about how like unions would become kind of obsolete as a result as well, because unions only really function when you can shut down the factory. But if there's no factory, it's kind of hard to do that. But one of the things he talked about was how like internationally, he talks about crypto too, but before crypto existed, he just calls like an encryption currency that he predicts will come about in the future. But there was no crypto at the time. But he's like, we're going to make some sort of like highly encrypted currency. 90s and like 97 or something.
DigiCash days. I was literally thinking that, like, man, some people are just prophets, bro. I don't get it.
Dude, yeah, honestly. This guy, I'm like shocked reading it. I have to like double check and be like, this was written when? Because it sounds like it could have been written in like 2016. Like it's crazy. Yeah. But no, he talks about how like we're going to invent some sort of like encryption based currency that's going to be peer to peer, and it's going to make it so that taxes will eventually become obsolete, because when everybody's on the encrypted currency system, nobody knows who's getting paid by who, where the money is, how much it is, how much people have. And you also can move it overseas instantaneously. Because it's over the internet, there's no border controls on money. There's no border capital controls. So he's like, people could easily just move money overseas and then move their person overseas as well. And then you're out of the country if taxes are too high. So there'll be this incentive for countries to compete for people, for these, what he calls the sovereign individuals, which will be these people that'll have no real citizenship and will just move to whatever, governance, whatever locality is most suited to their needs. You got to read the book. Dude, you'll vibe with it so hard. It's such a sick book. Bitcoin maxis love that shit. Not that I'm a Bitcoin maxi, but they love this book. It's like right there with like Bitcoin Standard.
Yep, this is true. I know people just like that. Tinfoil hat motherfuckers. Well, this was a good episode.
Yeah, I got to skedaddle.
Yeah, same here. You guys go and get your Grow It Owl. Our course is going to go on sale here pretty soon. Teach you everything about Web3, DeFi, yield farming, security, as well as stock investing options, overall portfolio management. So you can manage a multi-asset portfolio just like an institution, as well as financial accounting. Thanks for watching.
All right, I'll see ya.